Hi everyone, welcome to the Learn, Invest, Grow show. I'm Tae Kim, and here with me is Adam Levine. Hey Adam, how are you doing today?
Doing fantastic. Thank you. How are you?
Yeah, I'm doing great, man. Yeah, we're so passionate about real estate as to illuminate a relevant topic every week in the hopes of giving you requisite knowledge and help in real estate investing. Continuing on from our previous episode, we're delving into such an important topic, vetting sponsors. As we all know now, investing with a trustworthy, competent, scrupulous sponsor is really paramount.
Okay, so what did I learn? Number one, I just want to say thank you, everybody that's here, that's listening to me. Look, I put together this blueprint because I myself, I watched my father get taken um, by sponsors that were not experienced. Right, the last one was something simple from a background check. This time was just investing because of trust, investing, because the same thing, relationships were built, a lot of things, and he trusted. These are good people. They weren't bad people. The only thing that they lacked was experience. So what do we do now, right? I create a blueprint because I want to help other people not go through the same struggles as what he did. And I help him now. Obviously, like he learned a lot. He has over, 30 years of investing and, you learn a lot from that time. And I helped him put together a blueprint because now he really, he values the advice that I give him and he takes that. And I know I have you as well as a team member to really dive deeper into things. But experience is really not a complicated thing to look at. What do we look for in experience, right? What we do to look for, and look, it doesn't need to be, you know, you don't have to follow it to the exact method that we do it, but maybe we're just very careful. We're at that point where we don't need to take a tremendous amount of risk. Yeah, can you invest with someone that's less experienced and try to capture higher yield? Absolutely. But we're not looking to chase these grand slam returns with someone less experienced. That's not what we're looking for. But hey, if someone wants to do that, you could do that. What we look for was the first thing we look for. There's just a few things that we look for. Number one is time experience. Now, we look for a sponsor where the principals have a minimum of, at least 10 years. I like to see more than that. 15 years would be even better. The reason why we look for that is because, look, there's a few things you need to look for when you're analyzing. How do you know if they're experienced? Well, number one, they should be able to show you some type of track record of deals they've done, and you should be able to see it done from 10 years ago. You should see some type of consistent pattern of them doing deals. You don't want to see them doing a deal like 10 years ago, and then 5, 6 years, and then you've done a deal. You want to see a consistent pattern of doing deals. You want to make sure that they have been involved, not just investing. A lot of times you'll see someone that says, "Oh, we've, we invested and we've been investing as a limited partner with someone else." Now if you're a sponsor, that's completely different because now you're actually the operator. So there's certain things you really want to dive in deeper on that. Just be careful of you got to read, but you got to be able to see between the lines of what the story that they're telling you. Um, Another factor that I really want to touch on is volume experience. Now, look, like going back to experience, for how long they've been around, volume, how many deals have they been doing? You know, like I said, like you want to make sure, like if they've been around 10 years or 15 years or 20 years, you know, you don't, someone could say to you, oh, I'm a real estate investor. But how many deals? Oh, I've done one deal. You've done one deal in 20 years? Doesn't make any sense. You want to see that they've been doing multiple deals. Like there's a lot of syndicators that are coming into the market. They're, hey, look, it's very popular. There's a lot of promotional content teaching people how to raise money, how to become a syndicator, how they could build financial freedom and quit their 9 to 5 job by raising money to buy apartment buildings. Another very popular topic. And naturally, they're trained to go after people like my father, retired dentists, doctors, high income medical professionals, or just a high income earner that has money to invest, or accredited investors. They're trained to go after them. And what I like to do is I like to help people like my father that have money to avoid mistakes of investing with someone with less experience. So when we're talking about volume experience, okay, you want to make sure that they've been doing deals. If someone's trying to buy an apartment building, is that their first, let's say, 100-unit apartment building that they bought? I hope. I mean, look, I hope, in the sake of investing, that they've done more than that. How many have they done? So that's really important. You want to make sure it's not their first rodeo. You want to see some type of consistent track record of um of deals being done, and you also want to see how they performed as well. But let's just stick to experience for here. You know, you want to see that, again, like, how many, what's the volume that they've done? If they're trying to buy a $10 million building, have they done that type of deal volume before? And for how long have they been doing it? So remember, all this factors in. Crisis experience. Okay. So when we're saying been around for at least 10 years or 15 years or more, look, one of the sponsors that we invest with, they've been around um, from the 90s. They seen they see what happened in the late 90s. They've been around since 2008. These are two different market corrections, let's call it, or turns in the market, that these are events that, where a lot of times an inexperienced sponsor could end up out of business, and their investors could end up going down with them. Now, for example, someone with experience that's been around through multiple cycles, they've seen what's happening. And what's really interesting, for example, in today's environment with COVID, that look, this is the time where you're going to see who's going to survive, and unfortunately, there's going to be a lot of sponsors who that they're not going to make it. It's just a reality. And the ones that can make it through this is a very unique event that no one's ever experienced. If you could survive this event, that to me that's amazing. And this is someone that you wanna possibly look into investing with, because they were able to look. You can't buy experience. There's no way you could buy it, but if you could survive something like this event, that's incredible. And really, so these are like the three main things that we're looking for. Look, if you have any questions, by all means, reach out to myself, reach out to Tay. We're here to help. We could dive in deeper into deeper into this, but I'm just trying to give you something simple, something to think about. Three things that we look for: time experience, volume experience, crisis experience. Time, going how long they've been around, 10 years minimum, 15 years would be even better. Volume experience, you want to see how many deals have they done. Remember, if it's someone looking to raise money to buy an apartment building, they said they've been around 10 years. Well, if they've done one apartment building in those 10 years, something's doesn't add up. But they've done, 20, 30, they've done many, many, many deals in that 10 years. Now you can start looking at the track, like the performance, how things have done. And and that gives a better story. And now they're on to something. Now this is something you want to dive in deeper. Crisis experience again. You know, if they've been around 10 years or more, they've probably seen a cycle. They've been around because cycles are usually 10 years or so, you know, and this is the longest cycle that we've been through since 2008 up to until now. It's about, you know, a little more than 10 years. And now we're going through like a different scenario that we've never seen. But hey, look, someone that's experienced manager that's been around through 2008, they came through that. They should be having a better grip on today's environment. Someone less experienced coming up from, because think about it, there's a lot of investors that come up from 2008. They look like a genius because everything's going up. You throw a dart at a stock and you think you're a genius because everything's going up. I mean, once it hits bottom, you know, usually it probably goes up and there's going to be volatility. Same thing with real estate, you know. But if they could survive this, what's going on now from 2008 to now, that's experience. You can't buy that. And Tay, does that all make sense to you? Because I know I'm throwing out a lot of knowledge
Yeah,
in
yeah,
here.
absolutely.
I'm trying to give
Yeah,
examples.
sorry. Yeah, hey Adam. Yeah, thanks for sharing. Yeah, your first hand experience and yeah, insight. Yeah, I can agree more, especially when you said that. Yeah, you can buy experience. Yeah, and the abundant experience in real estate became yeah even more important in this unprecedented situation we are all going through now.
Yeah, and one more thing. Like, share, you know, smash the like button, share this, leave a comment. We're gonna post a link on the bottom. It's a way for you to sign up and get this blueprint. Look, this took a lot of time to create, and it's a lot from us, and we want to share it with you. And please, you know, this is something that's valuable as a tool. Use it. And this is the beginning of a ebook that I'm putting together. I want to put together a whole ebook. This little blueprint is a little piece of the ebook though that eventually, a few years from now, we'll have ready. So everybody, thank you so much for listening to us. Thank you so much. We're very passionate about this, and we're gonna have something for you next week. Until then, happy investing.
Happy investing.